Most traders think hedge funds are full of secrets, algorithms, insider info, billion-dollar strategies. The truth is, the biggest lesson I learned working at a hedge fund had nothing to do with some secret formula, secret sauce. And it's the reason I went from being broke to making millions in the market. When I initially joined the hedge fund, I was just another young trader with a chip on my shoulder. I thought that I knew everything. I'd already had wins and I'd already had losses, and I thought I was different. To be a good trader, I had an ego, right? But the reality hit me pretty fast. Hedge fund trading isn't about being flashy or aggressive or having an ego. It's about being boring, systematic, and patient. And that was the first shock that I had when I first went in there, because I thought that everyone had this ego and you had to be a larger than life character to be a good trader, but that wasn't the case. At the fund, we wouldn't even touch 95% of opportunities we saw. The analysts would run screens, we'd monitor markets all day, but trades only happen when the system aligned. Sometimes that meant waiting days or weeks or even months for one super clean setup. Compare that to the regular retail trader who sits at their desk, feels bored, and just forces a trade. That's not trading, that's actually gambling. And the professionals understand that money is made by waiting. They understand that precision beats action, sometimes. The second thing I learned was that risk is everything. If we risked 1% of the fund's capital, it was not random, it was very calculated. Stop loss levels were never emotional. They were systematic, and the reward had to be at least 2 to 3 times that risk. That was not negotiable. At the time, I thought risking bigger meant making more money. The fund taught me the opposite. Survive first, profit second. If you can protect your downside, the upside is going to take care of itself. And here's something that most people never experience: trading other people's millions of dollars. You realize really fast that your ego does not matter at all. Your emotions don't matter. Your opinions definitely don't matter. What matters is one thing: the process. And that's when it clicked for me. Trading is not about being right all the time. It's about making money. And I carried that with me, and it completely shifted how I approached my own accounts. And like I told you guys, yes, being in the fund made me millions. When I left the fund and started trading my own money again, I brought all those lessons with me. Suddenly, I wasn't chasing every single move. I was disciplined now. I was selective, and I was playing defense first. And because of all that, my account started to grow faster than ever, and I couldn't believe it. I went from being the guy who blew accounts almost on the weekly to the guy who built generational wealth in a couple years. And it wasn't because I had some insider trick. It was because I finally understood how the best in the world actually trade. If you take one thing from this video, let it be this: the market rewards patience, discipline, and risk control. Not adrenaline, not hype, not emotions. That's what I learned at the hedge fund. And it's exactly why I built the Lux Trader, to give you the same framework without all the Wall Street gatekeeping. If you want to learn how to think and trade like the pros, subscribe and check the links below. And remember, guys, think less, trade better, and I'll see you in the next YouTube video.